Hi, my name is Ed Schneider. I'm here on behalf of Dukascopy TV, along with AIC TV, and today I have the grand pleasure to have with me Xavier Oberson. Xavier Oberson is an international tax expert. He's a professor of international tax law at the University of Geneva and is one of the original founders, along with his father, of Avocat Oberson tax firm here in Geneva with offices throughout Suisse romande. Today, Xavier, there was a subject that we wanted to talk about because there's a votation coming up on June 14th about the inheritance tax. Maybe you could give us a little more color on what the votation is about and what are some of the important things that we need to know.
Absolutely. Yes, so thank you very much. Yes, there's a vote on the 14th of June, and what is important to understand is that this is about a new tax which doesn't exist as such today in Switzerland, which will be a federal tax, so it will be in all Switzerland, and it's an inheritance tax at the rate of basically 20%, which means that every resident citizen in Switzerland, if this law is accepted by the people, will have to pay an inheritance tax of 20% on any inheritance. And what is very new about this project is that for the first time it will be a federal tax. Today we only have cantonal inheritance taxes, which are very different from one canton to another. So the cantonal tax will disappear and it will become a new compulsory federal tax. And the second aspect, I think, also important to understand is that the rate is the same. So no matter if there's an inheritance within the family, between parents and children, or between relatives or friends, or if there's a gift to other friends, the rate will always be 20%. There's no difference if you are a relative or if we are talking about third parties. That's basically the content. There's a threshold of 2 million, so it's only inheritance after 2 million, but for gift it's 25,000. So any gift as of above 25,000 will be subject to this tax. And maybe the last point to make is that there's a retroactive effect on gift. So this is a very complicated aspect, I think, of this project, is that they want to look back for any gift that have been granted as of 2012. So January 2012, and there should be a recapture and then a tax of 20%.
How are they able to do that?
Yeah, that's a good question. I don't think they are very clear today, but the idea is that they should reopen the transaction and maybe tax return to check whether there's been this kind of gift as of January 2012, and then there's going to be a 20% tax.
You know, we spoke this morning, and actually prior to that, about the fact that Switzerland is one of the few countries where we have not only a wealth tax, but now wealth tax and a federal inheritance tax. Isn't that a form of double taxation?
Yes, absolutely. And that's one of the big danger, I think, of this initiative, is that they just look at one aspect of tax. They said, oh, we need to tax inheritance. And I mean, why not? You can discuss about this. But when you do that, you should look at the tax system in its globality as a whole. And when you think that in Switzerland we have already a very comprehensive system of tax, when you earn something, an income, you have an income tax. Then let's say you want to keep this money for savings, then you have the wealth tax. But then if in addition to that there's an inheritance tax, it's absolutely double and almost triple taxation from an economic standpoint. So this is one of the, I think, very problematic aspects from a, as we can say, from a theoretical and policy and moral standpoint. Yeah. It's always dangerous. I think this is sometimes the problem of this kind of initiative we have today, is that they look at a very little aspect of a system and they think, this is unfair, so we are going to introduce a tax. But they should look a little bit backwards and look at the system as a whole. Yeah.
So the thing that I noticed, I used to work in a private bank, and people that actually have a lot of money, they won't pay any inheritance tax because they could set up trusts and foundation. Their children could be employed by that foundation, and they won't pay anything.
Yeah.
Now, they need to have the capital to set up these trusts.
Yes.
But the problematique is say someone earns $3 million, inherits $3 million.
Yeah.
They get taxed on 20% of 1 million, that's 200,000, and often these are illiquid structures,
Right.
and they may not have the $200,000 to pay, and it could be a business, it could be, that's really unfair, because what the goal of this is to probably tax the wealthier people, but in effect it's not the wealthier people that are going to pay the inheritance tax anyway. So am I on the right path, or
Yes,
what do you think about
I think
this?
you're absolutely right. These kind of taxes also are very dangerous in the sense that people are mobile, and the wealthy people, these are the ones they are in fact going after, are the ones that won't pay in fact the tax, because they are also, not only they can set up structures which could be sometimes problematic, but they can also move. And they can move very quickly. They can go to another place where there's no such kind of tax. We see that today, for example, even for the wealth tax in Switzerland, we have, because it's a tax which doesn't exist in most states, the wealth tax. Many people are going to London, even to America. There's no wealth tax in America. Even in Germany, which is not a tax haven, there's no wealth tax. So these people are very mobile, and the rich people are even more mobile than others. So they won't pay, I agree with you, they won't pay at the end this kind of taxes. And this is the, let's say, upper middle class, basically, that we'll have to face. And it's also very unfair for, I would say, this is one of the big critiques of the project, is for inheritance of enterprise.
Right, exactly.
Because this is really a problem, because an enterprise, as you say, is not a liquid asset, and the enterprise will create job, and especially small and middle-sized enterprise are really what Switzerland is all about. I think the economy and the success of Switzerland from many economic surveys relies on these small and mid-sized enterprises. Now, if you want to introduce a tax, it means there's going to be a valuation of the enterprise at the time of the inheritance. But this is just, as we say in French, an outil de travail. It's enterprise which will bring income, but in the long term. But if you make this valuation, you are going to tax very heavily the enterprise, and some people might not be able even to go on, and they have to sell it. This could create lose jobs. I mean, this is a very problematic aspect. I'm surprised that they really didn't find a way to solve this issue here. Yeah.
I'd like to talk more about the inheritance tax, but unfortunately we're running out of time for today.
Yeah.
But are there any last thoughts that you'd like to give on it before we close up? Anything you'd like to say about it?
Yes, what I would like to say is that I understand, and as such, I'm not so much against the inheritance tax as such, especially if there's an inheritance for a third party, if it's not, let's say, within the family, between spouses or parents and children. But then you should really do something about the wealth tax, because the two taxes are really combined. And if they try to design something different and include everything, then we could discuss much more in favor of such a system.
Well, thank you, Xavier, for joining us today. It was a pleasure having you again. Again, my name is Ed Schneider. I'm here on behalf of Dukascopy TV and AIC TV, and I'd like to thank you for listening with us today, and I look forward to many interesting interviews in the future.